Well, Goldilocks conditions have created perhaps the most bullish market in human history. Hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday the 16th of July 2024, and before I get started, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for you. So, we've seen a series of all-time highs in the US, and eventually that led to a series of all-time highs in our own market. Indeed, we've seen all-time highs in Japan, in parts of Europe, and in many parts of the Western world. Obviously, it's been led by the US, and they've had just about the perfect conditions for their market to push higher. They've had inflation coming down, so inflation's back to around 3%, and it's falling towards the Fed's target range of 2%. We also saw testimony from Fed Chair Jerome Powell, who basically stated that if they waited for inflation to reach 2%, it's going to be too late, and they have to start cutting it, ahead of inflation getting to the target point. He basically signaled that he thinks, they should start cutting as soon as possible, essentially. We've also got money printing. So the US federal government is running a record amount of government deficits. They're essentially engaged in credit creation by spending way more money than they're earning. And we've got inflation coming down where the market thinks that a soft economic landing will be achieved. So inflation's coming down, yet the consensus is that a recession will be avoided. So all of this adds up to very, very positive conditions for the market, and it actually does look like the market might be just about the most bullish market in history. It's a bit hard to sort of gauge what makes something more bullish than anything else, but if we look at things like price to earnings valuations, they're about as high as they've been outside of the GFC and outside of COVID. If we look at things like the number of days without a significant fall, well, there's been a record number of days without a significant sell down. It just about most metrics you look at signal just how bullish this market is. Now, the one thing that I think could throw a bit of a spanner in the works for the market is the earnings season. And indeed, given share prices in the US are so high, we will have to see strong earnings growth to justify these very high prices. That is a bit of a spanner in our own works here in Australia, where our market's actually expected to earn less this year than it did last year, yet our prices are 15% higher on average. Indeed, we've got a bit of a reality check today with Rio's quarterly production report. We'll see the BHP quarterly report tomorrow, and indeed, the August reporting season is not too far away for our own market. So the big thing driving markets higher is the US rate cut story, and indeed most people are now expecting between 2 and 3 US rate cuts this year, starting in this September meeting. Like I said, that was driven by Jerome Powell last week, and indeed again this morning, with his statements that if they wait for inflation to get to the target level, it'll be too late. So he favors cutting interest rates in advance of inflation continuing to slow. And he thinks that they basically have to start now because the monetary policy is a very delayed effect. So he basically says we've done the hard work, things are going to keep weakening from here, and so we need to start cutting now because the effects of these cuts aren't going to come through for some time. And so they will have a meeting at the end of this month. It's generally accepted that they'll wait until September though, until they do start cutting, and then most people think there'll be either another 1 or 2 cuts after that this year. Like I said, this is very positive for shares, and it's part of the reason why shares have been as bullish as they have been. I guess on the contrast to that, we've got our own market, and we're actually in a bit of a different position. Our inflation is remaining fairly strong. And our other economic data has actually started to heat up a bit as well. So many in our market are suggesting that we might see an Australian rate rise at the August RBA meeting. Whether or not we see that is a bit difficult to say, and there will be a couple of key pieces of data that will inform that decision. The first of which will be Australian unemployment this week. If unemployment is stronger than expected, it increases the chances of an August rate rise. And then we've also got the quarterly Australian CPI at the end of this month. And again, if that's stronger than expected, likely to see an August rate rise. Given the data that Australia has seen in isolation, I think a rate rise would be quite likely. However, if we do see the US signal rate cuts and we see rate cuts happen in other parts of the Western world, the RBA might just hold off raising rates because of that. And that could be a little bit of a silver lining for the Australian market, I guess, is that, you know, while our economic data remains high and remains inflationary, if other markets around the world are cutting interest rates, that might sort of give the RBA reason to pause. So something just to keep in mind. The other thing this week is we saw an assassination attempt on Republican presidential candidate and former President Donald Trump. Apparently a bullet grazed his ear, so he survived the attempt, obviously, and that basically guarantees him a landslide election victory. The fact that he survived, the fact that, you know, basically he's had this positive news, we've had these positive photos come out about him, I think that guarantees a landslide win for him unless something traumatic happens. In 2016, before his previous election, the market was very nervous about Trump, very skeptical about Trump, and, you know, may have seen selling with Trump's increased chances of victory. However, it's actually 2024 now, not 2016, and Trump has proven that he'll measure his success in the performance of the stock market. And he's proven that he will be very, very pro large listed businesses. So I think the market's happy to rally on the back of Trump's increased odds based on the view that he's going to legislate and work to support the market and do what he can to favor, you know, the market perhaps over individuals. And so, yeah, I think the events of the weekend, if anything, either neutral or positive for the market itself. So let's have a look this week at the charts, guys. We can have a look at the XJO. We can see that it broke into a fresh all-time high last week, broke above 7,900, and it's come up to roughly 8,000 index points where it's stalled today. If we do see some selling from here and perhaps a bit of a pullback, we would expect the target to be the previous all-time high at the 7,900 point level. In terms of where this move may stall, possible stalling point is the current level, roughly 8,000. But whether or not that holds as resistance or not is too early to say. So we will need to see whether we pull down from here tomorrow or later in the week. But for now, seemingly sticking at 8,000 and possible downside target 7,900. If we have a look at the US market, the S&P 500, they also broke into fresh all-time highs. In fact, they actually had 6 all-time highs in a row over the past fortnight before they pulled back late last week. Though they have continued a little bit higher on Friday and Monday, they haven't been able to close higher than they did you know, earlier in the week last week. So for me, it looks like they're starting to form a bit of a resistance level, at least in the short term, at 56.50. They are on such a strong uptrend that you would assume that that would break. But for now, until they can close above 56.50, it does look like they want to drift sideways to perhaps even lower. If they do drift sideways to lower in the short term, we'd be looking at a move towards the longer term uptrend line here. That comes in at roughly sort of 55.60, 55.70. And if that breaks, we might see a move back to the previous all-time high resistance at 5,500. There is extreme bullishness around the world, but we do need to keep in mind that prices are extremely high, values are extremely stretched, and we are about to enter some earnings reporting seasons. So I will wrap it up there for this week, guys. Hopefully you enjoyed. If you did, click like, click subscribe, and we'll see you in the next one.